Hi, I'm Robert Maltbie with Maltbie's Minute on the Market from our West Coast office in Southern Cal, Santa Monica, right before the sun goes down. So I'm going to read fast here. We're calling this update in July 24th, the Fed's bear. Monetary factors are waiting on the bulls. Our MMI is slightly negative at 46 on a scale of 100. Here are the indicators. Market sentiment, negative. The VIX is at 13, which is a pre-COVID reading of complacency. And the bull-to-bear ratio of 1.5 to 1 to the bulls is a little too bullish for our liking. The technicals are positive. Every single market index is above its 200-day moving average, and showing over 72% of equity stocks above the 20-day, a little bit overbought, and a solid 59% above the 200-day. I think showing good breadth for the longer run. Liquidity is a trickle, but it's a positive trickle and a change in directionality, which is very positive. Issuance is low, and net flows into mutual funds, hedge funds, and ETFs positive, 12 billion after all said and done. Looking at valuations, we have a bifurcation. We have the Magnificent Seven at 38 times, pretty fairly valued even with their stellar growth. The market, the S&P itself, at 20 times, which by our model shows a 20% overvaluation based on current rates and trailing earnings. And then you have the not so hot 493 at 15 times with positive earnings yield of 180 basis points, and that is constructive. Earnings momentum is positive and leading this bull market. The beat ratio in the first quarter was 80%, and that is continuing in Q2 at 80% so far. It is early. The revisions are above 64%, and that's a great trend above the 5 and 10-year averages. And the beat ratio at 8.8% average beat above the 10-year average, and an acceleration from last quarter, which was 6.4. So some positive earnings momentum is good at this juncture. Impressively, estimates for 2024 are for 12% growth in earnings on the S&P 500, and margins are holding up even now after all the interest rate hikes and inflation, holding up nicely. Does someone say Goldilocks? Okay, well, now for the big bad wolf, the Fed. Hawkish, very tight. M2 growth is negative, and quantitative tightening is tight. Combined, not a great concoction. A hike coming in 2 days, no doubt, 25 more basis points. But, with over $5 trillion in money markets and the aforementioned fundamentals holding up, really looks like we're at the end of the Fed hawkishness, although they'll probably talk it up a little bit too to boot. So we really have two markets right now. We have the Magnificent Seven at 38 times, probably going to take a break and hand the baton over to the not so hot 493 to take leadership. That's what we believe is going to occur here, and we're looking for a nice summer. Surf's up. Come to our website, take advantage of our trial subscription, get in front of a good flow of new ideas in the small cap arena, which are attractively priced, roughly 40-45% discount to the S&P 500. Very good entry points. We're going to have some, I think, strong ideas for you to add some alpha. Come take advantage of that trial subscription while the price is right. Robert Maltbie, Maltbie's Minute on the Market from our West Coast location. Have a great day.